Well, good morning once again. I'm Marlin Bohling, your tour guide of the ag commodities. Let's take a look at how we're opening up in our daytime session now. And keep in mind, we did have an overnight export sale reported of some soybeans. It was 252,000 tons of soybeans to unknown destinations. But will it matter to the trade? That is the key. I'm sorry, 251,000 tons. Okay, let's take a look at what we have going on. We'll start with the corn board. Now, our quotes are from bar chart, and on the corn, I don't know exactly what's influencing the corn. The corn was higher at the start last night, finished up a little lower. Now December is unchanged at 481.5. There's a lot of give and take in the market here. Some say the market is oversold. Some say, well, there's just a plethora of corn out there, more than we need. And then some say that, well, we're going to be starting harvest here within a few days if we haven't already. And so that could weigh on the corn market. But anyway, just while we're looking at it here, corn went from a quarter lower to 3/4 higher. So there you have it. In about 30 seconds time, we're on both sides of unchanged. So the corn is kind of wishy-washy starting out here. On the soybean trade, even with that big export sale that we can add to all the others we've had the last 2 weeks, November soybeans are 3 lower at 1366, now 3 1/4 lower. And this is the one that you would think, if we're going to have hot, dry conditions in the Midwest and the plains, it would hurt the soybeans more than anything because the corn basically is done. The soybean market going down nonetheless. Technically, that could be a bit of a concern here. Now, in Chicago wheat, December is trading 3/4 cent higher at 596 1/4, so not much going on there. And in Kansas City wheat, we have December now 5 lower at 717 3/4. That's almost 11 cents off of our overnight high. Did I hear Tim mention that there could be some rain in the plains, maybe longer term? I don't know if that would be weighing on the market that much, but it might be. I'm hearing some rumors about that. And in Minneapolis wheat, you have December down 2 1/4 at 757.5. On the cotton market this morning, we had all kinds of pressure, and now December is down 233 points. At 87.62 per pound. Man, they're taking a big bite out of the cotton market here this morning. We have Chris Swift on the line. He, of course, is with Swift Trading in Nashville. All right, Chris, so the corn and soybean markets can't really seem to find a lot of support here in the early going. How come?
You know, Marty, I'm not real sure, but I'm very pleased that they're not down dramatically. I mean, here we are fixing to face harvest in corn, and it's up 1/4 on the day. So those are factors that I look at, and even beans. Beans down 1 1/4 on the day after we know that we've had pretty good weather for the last part of August, and we know we're going to get a little bit drier here, but there are some issues with beans that are not going to be overcome now. I've heard of some unfortunate where they're already having to cut some beans for hay. They're just not going to make what they are. Down south here, we probably got the best bean crop we've ever had, but up north where they grow the really big beans per bushels per acre, they're just not getting it there.
You know, I spent the weekend up in Kentucky, and I noticed there were some beans up there that were kind of getting that gray color to them. And that's kind of a warning sign that they're really hurting for moisture. And if that's the case, if they don't get the rain, usually that means you're going to lose some of those pods on the top of the plant, right?
It does. And, you know, something that we're seeing like the last 7 trading days. We gapped up last Sunday night, and then ever since then we've been kind of going down, but we haven't really lost that much, 35, 40 cents from the top that we had there. So, again, I'm kind of looking at the undertone support, even though we're not up 10, 12 on the day, we're not down 20, 30 on the day like some might be thinking going into harvest like that. So I think it's a pretty good supportive ordeal that we're just not plummeting going into harvest right now.
Well, now that's a classic case of putting lipstick on a pig. All right, good job with that. Let's take a look at the wheat market then. And what's your thought on this? Why the pressure in the Kansas City wheat compared to Chicago this morning?
Now that I have no idea. The traders themselves love to spread that market, so there's really not a definitive, I have to have hard red winter because of this, or I have to have the durum because of that. I don't think that's any of the case. I think it's just a spreading aspect, and we know that Russia has been very active in the grain restrictions in the Black Sea, so more likely than not, it's a very specific item between either a producer, not a producer, but an end user or some kind of shipping magnet out there, but probably not anything U.S. related here.
I pointed out when we came on the air this morning that we had the U.S. dollar index about 400 points higher. It's still real close to that right now. It's not doing the grain market any favors, is it, if it does this?
No, it's not. And remember, that's an intent by our administration. Our administration wants to quell inflation, and higher bean prices, higher corn prices is considered inflationary. So we're going to be, our administration is working against everything that we probably want when we talk about inflationary aspects for wholesale products.
Okay, well, that's interesting. We'll pause right here. And Chris, you and I will open up our livestock trade and take a first look right after this. We are back with you, and now we're going to open up our livestock trade, take our first look at the prices provided by bar chart, beginning with the live cattle board. And right now we are trading a little bit weaker. Gee, sound familiar on a morning open? Gosh, who would have thought live cattle would be a little weaker? December is currently down 47 cents. We're at 183.70. Let me back up a little. October is down 52 at 179.62. So generally, let's call it 47 to 67 lower all across the board here on live cattle as we get rolling on a Tuesday. On the feeder cattle market, a lot of triple-digit losses here. You have the October contract $1.37 lower. We're at 253.27. And now, the November contract down $1.30. We're at 255.07 right now. So a lot of pressure there. Now in the lean hog trade, they are going higher. You have October up 85 at 83.90. You have December trading 90 higher at 75.50. That would put us about 50 cents from the high and the low because they're $1 apart, and we're smack dab in the middle right now. Let's go back to Chris Swift and Jawbone about this livestock trade here for a little bit. The cash cattle trade was very slow last week, and now we're opening up with pressure here on the futures trade as well, Chris. What's the market trying to tell us here anyway?
I think the cattle industry has hit a mode of stagflation. All the input costs are elevated. All the prices of the cattle, doesn't matter what category, weight category you're in, they're all elevated. And we've got to have a push either by the consumer or by the product itself dramatically higher or dramatically lower to break this stalemate. And some of the charts that I looked at over the weekend begin to show where some of our producers had made stellar profits. Those are all starting to set back now. And as we go forward, we know that every cow that is sold going forward was a higher price paid for in the past. So that's going to probably continue if we think we paid the highest prices still today. Today is the highest price of the feeder cattle index. We got 5 more months to go out for everything that is bought today at the absolute tip top of the market. So stagflation is going to play a really big, important part on the prices, and that doesn't mean they'll go up or down. It just means some real hard pressure on our cattle producers right now.
Did you notice were the feeder cattle runs at the auction barns, were they very heavy last week or not?
They were. They were up dramatically week over week. They were almost unchanged year over year. So we're still seeing plenty cattle. And when I say ample, if you look at the whole thing for the last 2 years, we're only down 10% of production of everything. Cattle production, beef production, all down 10%. And yet we're 126% plus higher in price.
Wow.
So I understand elasticity. I do understand that is a viable market, that just because you go up a percent in one or down percent does not make an equal change in price. But that is a huge discrepancy, and I think that some of the elation that the cattle market has gone through because of the higher prices is kind of settling down just a little bit into, hey, we got to make these things work at some point in time in the future.
Well, I'm glad you pointed that out. Thank you, Chris, for all the valuable information. Chris Swift of Swift Trading in Nashville joining us here on a Monday morning.